This is the one-day reading for the S&P 500 throughout the day of January 5th, 2022. It's currently January 2nd, 2022, 8:49 p.m. The overall theme and behavior of the day is going to be two equal and opposite moves that cancel each other out. So like basically a full retracement of a big move. In the pre-market, we have a peak that forms when we break through a resistance level, and then we stay above that resistance level just briefly before we break down through the same price level, creating kind of like an upside down U or an A. And then we have a sideways S formation right around the open. That's generally two declines with an incline in between. And a important support level is highlighted. We attempt to establish support or reestablish support at a significant. That price level is significant, and it's highlighted between roughly 9 and 9:30. And then we have a big move off of that support. It picks up steam really quickly. A lot of momentum building and increasing as we move forward in time. And that's roughly 10 to 11. Oof, then we get a real big move. We push the upper end of a range higher between 11 and 12ish. And then there's a sharp decline. Like it's like an equal, the big move higher is canceled out by basically the same size move in the opposite direction, which is what the universe card really tells you. There may be something related to the world, something on a global level that turns the market around. Then we turn around and we move higher again, like almost like irrationally higher, like it's greed based for sure, and we reach a distant support level, maybe the same support, or excuse me, a distant resistance level, or possibly the same resistance level that we had just created prior to that decline. And then we have some volatility that picks up between roughly 2 and 3ish. There's an opportunity in there in the midst of, we meet a resistance level, and then there's volatility as we start to decline. Yeah, and then in the last hour we have a selling off from a severely overbought territory. On the RSI, it would be at like 80 or above. Congress is highlighted right around the close. And there's a push higher from a support level all the way to a resistance level just around the close. In the post market, we have a rally along a diagonal support level. We break through a horizontal resistance level and meet a second resistance level before we pull back slightly. Around the high for the day, we're going to have a lot of fluidity, so there's going to be some like back and forth in a tight range. Interesting. Back and forth in a tight range behavior, equal amount of bulls and bears around the high. Poof. More. This is going to be a volatile day. So we have swings. We have price swings around the low. We have basically like a tight range of price up and down movement that just goes sideways. These are both basically like sideways cards. Pretty interesting, and that would really make sense when you think about what we're doing. We're just moving sideways. We go all the way up, and then we come all the way back down. And that's like a full retracement. You just moved sideways, really, but with doing way more work than you should have had to, type of deal. The following day's sneak peek is an unexpected failure and an M formation around a price level. So we cross the price level. Let's say this is the price level. We cross above it, then we cross below it, then we cross above it, then we cross below it. An M formation because of something that everybody's counting on. It doesn't pan out, and it's a surprise for everybody. And the trade opportunity, there's a trade opportunity in the midst of a decline where the price will spike up to meet a moving average, which will act as resistance, and then it'll fall further, spike up to meet a lower moving average. It'll be resistance, it'll fall. So there's a opportunity in there where we don't break through a high, we don't break through a resistance level, and I believe that's likely going to be right here. And then if that's the case, this should be a sharp decline. But we'll see. I mean, to know that for sure, you'll have to check out the second portion of this reading, which is the meta pattern recognition portion. And that's where I'm able to identify within the hours, sometimes even more so, sometimes even more accurate than just the hour, often actually, using that system SOMETA, or the meta pattern recognition, which I developed over a 20-year period. So you can check out that link by, or you can check out that second portion of the video by clicking on the link below, and you can also go to the website. And don't forget to sign up. If you haven't signed up for the newsletter, it's free, guys, and we have a sick accuracy, like in the high 90s every month, predicting highs and lows. So with all that said, guys, thanks for watching. Don't forget to like and subscribe, and check out that meta pattern portion, because it's really crazy how accurate it is. It still shocks me sometimes. All right, guys, thanks for watching. Take care.